I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Ideal weather is expected to continue for much of the Midwest, improving soil moisture conditions. Government forecasts are calling for heavier rainfall across Missouri, Illinois, Indiana, and parts of the Delta through early next week. That is expected to come with severe storms, but USDA meteorologist Brad Rippey says that crops have still benefited.
But at the same time, except for a few spots in the central Corn Belt where we did see excessive rainfall totals of 4 to 8 inches, most of that moisture is going into growth of corn and soybeans and other water demands at this time of year when we have peak demand on water.
Rippey says the pattern this spring has consisted of a relatively cool and moistened setup across the Midwest, beneficial for crop development. As for the South, heavy rainfall is expected to reach Louisiana, Mississippi, Alabama, and Georgia over the next few days. While that could be beneficial for crops experiencing drought conditions, Rippey says larger totals could be detrimental for many areas.
On top of the rain that has already fallen in this region, we could see another 4 to 8 inches or more from the upper Texas coast all the way into Georgia over the next 3 or 4 days. Given the previous rainfall that we've seen, the drought eradication that much of this area has seen over the last 6 weeks or so, this could lead to some extensive flash flooding, and eventually that could translate into some river flooding and bayou flooding as well across parts of the Deep South and along the Gulf Coast.
Cotton areas would be in line for those weather impacts, though the extent of potential damage has yet to be known as crops move through developing stages. U.S. pork exports maintained a strong pace in April, led by broad growth in shipments to Asia and parts of the Western Hemisphere. Monthly data from the U.S. Census Bureau showed that pork exports totaled 257,200 metric tons during the month. That was up about 8% year over year. Dan Hallstrom, president and CEO of the U.S. Meat Export Federation, explained that growth.
Pork continues to have the same momentum that we've seen for the last 6-8 months. We have considerable growth in the Latin American region. If you look at both April and the whole year-to-date time frame, Mexico, you're looking at record growth. Central America at 10% growth for April is also on a record pace. Caribbean as well, with the Dominican Republic also on a pace that's close to record.
Year-to-date pork exports are running 4% ahead of last year at just over 1 million tons. Meanwhile, tight supplies continue to impact U.S. beef exports. The United States shipped nearly 90,000 metric tons of beef in April, down 11% from a year ago. While prospects are brightening for U.S. beef's return to the Chinese market, April results still reflected a near-total lockout. Still, Hallstrom did note growth in other areas.
But if you take China out, we're actually growing a little bit. So the rest of the world is performing. So specifically, the growth markets for the month of April, Taiwan up 9%. That's been a trend for the whole first quarter. Caribbean's up, similar to pork. Caribbean on beef is performing up 8-9%.
Total beef exports for the calendar year are running 11% below last year at 365,000 tons, the slowest pace in a decade. Retail nitrogen prices have begun to see a reprieve from upward pressure. Global nitrogen prices are rapidly declining, reversing March and April surges amid trade disruptions in the Strait of Hormuz. Biweekly price updates from the USDA showed that retail anhydrous ammonia prices in Iowa declined $32.70 since the end of May to average about $1,088 per ton. Additionally, urea prices saw a $48 decrease to an average of about $780 per ton. Meanwhile, phosphate and potash prices held steady compared to 2 weeks ago. Global urea prices plunged again this week after India's latest tender showed large volumes were offered at less than half of the levels paid in the previous one. Nitrogen demand also hit its seasonal peak that could allow prices to continue to decline through the summer months. The market is waiting on more details after the United States and Iran signed a new ceasefire agreement this week to see how shipping through the Strait of Hormuz can return. According to data compiled by Bloomberg and Kepler, there are over 40 vessels laden with fertilizer in the strait. The ships trapped in the strait are estimated to be carrying about 1 million tons of nitrogen fertilizer. Additionally, fertilizer giant Mosaic said sulfur shipments, a key phosphate input, will take months to return to normal once the strait opens. Additionally, analysts expect oil and LNG exports to receive priority over fertilizer once shipping resumes. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.